Clearly, Neeraj, the other banks like Axis Bank, ICICI Bank, and even public sector banks like Bank of Baroda, Canara Bank, I think these offer a better opportunity. In fact, these numbers are not so impressive that, probably you'll see a significant amount of re-rating in HDFC Bank. I think what kind of numbers finally come out after the Q1 and what is the kind of management commentary is going to be very important. The management commentary is very crucial because the market would like to understand as to whether it is just one bad quarter or it's going to be another couple of quarters before this slow growth actually improves going forward. So I think HDFC Bank, we have been telling our clients to hold on, but fresh buying after this input from the company, we would be a little cautious and we would prefer to wait for the management commentary and the results to come out. Harsh, this is definitely a big positive. In fact, if it does fructify, then I would not be surprised that we could see some further re-rating because there's going to be a lot of value unlocking from the Geo business. And I think clearly if that happens, that would definitely be much ahead of what the street was expecting. My sense was that, earlier the retail business could get, value unlocked earlier and then the Geo business could come in. But now I think with these reports, it looks that some homework and some planning has been done by the management, and very soon, if everything goes well, then I think looking at the market conditions and plus the kind of strategy the company is planning, we could obviously see this value unlocking happening very soon, and that definitely means that this rally will continue for some more time because obviously a lot of value will materialize for the parent company, that is Reliance. But I think on a standalone basis, Geo would definitely command a very decent premium in the current telecom market. Telecom market has been improving quite well. Pricing power has been coming back. And I think that would obviously aid the valuations of this business. So I think, we'll have to wait and watch, but something definitely seems to be cooking. And that's the reason the stock has moved up quite significantly.
Within real estate, do you like more?
I think, the larger players like DLF or for that reason, companies, which are in northern India, specifically Anantraj, which we had earlier also suggested on your channel. I think clearly larger players like DLF and I think Mumbai-based players like Oberoi or for that reason Mahindra Lifespace. These are companies where I think a lot of visibility is there. The inventories are also moving pretty well. And I think specifically if you look at the Gurgaon market, prices have shot up by 30-40% in the last 6 to 8 months. Typically, I think, the real estate market continues to be in a sweet spot. Inventories are moving. And despite the fact that interest rates have been relatively high, I think, there's no dearth in demand for the middle and the luxury, segments in the market. So I think clearly, of course, the affordable segment is also a growing segment. But I think companies which are present in the luxury and the middle kind of segment are companies which one needs to watch, because I would believe that in the first quarter, you could see a lot of margin expansion, for these companies. And I think hopefully, if some announcements come out in the budget, then I think you're going to see a further re-rating in these companies. I think the real estate cycle also definitely has picked up very well. There's a lot of liquidity in the system, and I think good amount of delivery buying has been happening. So that also has added to the appetite and many new projects launched by these companies.
Sure, Avinash. Avinash, just trying to understand the risks involved here. The index has been up 33% over the last 6 months. Year to date, up 40+%. Multi-bagger over the last year or so, 12-month returns 112+%, and from COVID lows, it's up 6.5 times. So, just wanting to try and understand what could play a spoil spot here. What could be the couple of factors outside of demand, maybe, which doesn't seem to be showing any signs of a slowdown. But what outside of demand could possibly play a spoil spot?
I mean, this is related to the real estate sector.
Yes, please. Yes, please, Avinash.
I think my guess is at least, Harsh, at least for the next 3 to 6 months, we've been talking to a lot of builders, and I think, the mood on the ground is that at least for the next 6 to 8 months, I think demand continues to be rock solid. Unless there is some sort of, kind of major price correction or a price crash in key markets. Of course, if more supply comes in, because that's the only worry for real estate companies. At least in the next 6 to 8 months, I don't think any major supply is going to come in the market, and which is going to disturb the price momentum. Markets like North Delhi, or for that reason Gurgaon, Mumbai, I think these markets are steadily absorbing whatever supply is coming in the market. So I think that's the only risk. I think if you look at the liquidity point of view, there's enough money in the system. Apart from equity, there are a lot of investors who have been investing in good quality real estate assets. And I think this time the real estate rally is backed by something solid. It's not purely, investment buying. People are buying houses, specifically a second house or a third house, as a kind of a, actual kind of investment for living there. So typically, I think, it's too early to say whether the crash would come. So I think, at least till the September or December quarter, I don't think this rally is going to stop. I think, in fact, if interest rates do come down, Harsh, that will add some further, incremental benefit to the rally, because interest rates, the way they are, very strongly, possibly post September, we could see rate cuts happening, and that definitely could be a big value driver for these companies. So I think at least near-term prospects look good. I don't think there's anything to be panicked. Yes, but wherever stocks have moved up very fast, I think there one needs to be very selective. I think, the broader market also has gone up so fast. So I think one has to be a little choosy and selective in zeroing down on only specific companies where there are key triggers, because the market is definitely now very clear that everything and anything cannot go up. Valuations will do matter. And that's why I think, we have been positive on Anant for a very long time. Now, of course, the stock has been covered by a large institutional brokerage house. But I remember around 350, 400, the stock did not enjoy any premium re-rating at all, despite the fact that it's got a 300 megawatt data center capacity, which is among the largest, within India.